Here's what I see constantly with solopreneurs. They're making great money. They're busy. They're profitable. But when you ask them, how much can you afford to pay yourself this quarter? Do you have enough set aside for taxes? Can you hire someone right now? They pause. They guess. They say, I think, but I'm not sure. That's operating in the fog. And here's what the fog costs you. You underpay yourself because you're afraid of running out of cash. You overpay yourself and then you scramble when taxes are due. You delay hiring because you don't know if you can afford it. The fog creates hesitation, and hesitation kills momentum. About 10 years ago, I realized something. I can't advise clients on quarterly planning if I'm not doing it myself. So I built a quarterly ritual. Now, 4 times a year, at the start of every quarter, I spend 90 minutes running a quarterly cash flow exercise, and it gives me complete clarity. I know exactly what I can pay myself. I know what I need to set aside for taxes, what I can invest in wealth building, and what's left to invest in growth. There's no fog, there's no guessing, it's just numbers. I'm Gabe Nelson. I help high-earning solopreneurs stop overpaying in taxes, build wealth that compounds automatically, and create the option to make work voluntary on their timeline. And in this video, I'm going to walk you through the exact quarterly cash flow ritual I use in my own business. The one that keeps me sane, lets me scale intentionally, and ensures that I'm never caught off guard. This is the 3 money buckets methodology in action. Let's dive in. So the ritual has 5 steps. Each one takes 10 to 20 minutes. By the end, you're going to have a complete financial picture of your quarter. Here's how it works. Step 1, calculate the total cash available. What I do, I start by running my quarterly client fees. In my business, most clients pay quarterly, so this is when my cash comes in. I add up the following: all invoices coming in for the quarter, any recurring revenue hitting this quarter, and any one-time project fees. That gives me a total revenue for the quarter. Then I add it to my current business bank balance. So the formula is total cash available equals current bank balance plus your quarterly revenue. So example from my business, let's say that I start quarter number 2. Current bank balance was $85,000. Quarterly revenues, my fees invoiced is $320,000. Total cash available, $405,000. So that's what I have to work with for the quarter. Now, step 2 is the quarterly expenses. Now, what I do is I go into QuickBooks and I run a profit and loss report for the previous quarter. This shows me the following things: what I actually spent last quarter, where the money went, what the profit margin was, and I get to use that as my baseline for the quarter's expenses. So typical expenses in my business is going to be payroll, it's going to be me, it's going to be my daughter Lauren, it's going to be Eric, it's actually going to be my wife Melissa, software, CRM, financial planning tools, email, scheduling, all that, professional services, CPA, attorney, marketing, ads, content production, office. I office out of my home, but I've got expenses from the office of using the home office, professional development. For most service-based solopreneurs, quarterly expenses are going to be relatively consistent. So last quarter's P&L is a solid example, all right? So let's just say last quarter's expenses for this example purposes was $95,000. I assume this quarter will be similar, so I budget $95,000 in expenses. Now, step number 3 is you're going to set aside your money for taxes. What I do is I calculate my estimated tax payment for the quarter. This is going to include my federal income tax, my state income tax, although state of South Dakota, I don't have that, thankfully, but a lot of solopreneurs do, and then self-employment tax, all right? Now, I'm an S corporation, so my payroll taxes are all coming out through my payroll, and then they're kicking off to the IRS via my CPA. So you set aside about 30 to 35% of your net profit for taxes. This ensures that I'm never scrambling in April, all right? Keeps things really, really simple. If my quarterly revenue is $320,000 and expenses are $95,000, my net profit looks like $225,000. So my tax reserve, 32% of that would be $72,000. I immediately move $72,000 to the tax reserve account. It's out of sight. It's untouchable. It's set aside for taxes only. Now, the next thing we do, step number 4, is we set aside money for wealth building. What I do is after allocating for taxes, I allocate money for wealth building. This includes my quarterly 401k contribution. It's built into payroll, so it's already accounted for in expenses. Melissa's quarterly 401k contribution, our annual cash balance plan funding. I basically set aside a bit each quarter to make sure that I'm not scrambling at year end. And then the additional personal investment contributions. I treat it like an expense. It's non-negotiable. So this example, this quarter would be I'm setting aside $15,000 toward our annual cash balance plan funding, $8,000 for additional personal investments, total wealth allocations $23,000. I transfer that $23,000 into a separate wealth building account outside the business. Again, out of sight, untouchable. Then we go to step number 5, where we're going to calculate our excess reserves. That's going to be our growth fund. And what I do is I take a look at what's left. This is the excess reserves, the money available to invest in scaling the business. So the formula I use is to keep it simple. Excess reserves equals total cash available minus expenses, minus taxes, minus wealth. So this example really comes down to running this full calculation. Total cash available, $405,000. Quarterly expenses, $95,000. Tax reserves, $72,000. Wealth building at $23,000, which is basically netting out to $215,000. That's my growth fund for the quarter. It's what I can invest in. Hiring, marketing, new software or systems, strategic projects, or I can just leave it in reserves and let it build. So you notice what just happened. We just implemented the 3 money buckets. Bucket number 1 is your operating expenses. That's the $95,000. It keeps the business running. Bucket number 2 is taxes, $72,000 set aside, untouchable. And bucket number 3 is your wealth, moved outside the business, invested. Everything else that's in your business account, that's going to be your growth capital. And because I know exactly what's in each bucket, I can make clear decisions. So one of the most common questions I get from solopreneurs is this: when can I afford to hire? Most people guess, or they wait until they're drowning or have to hire, which is reactive, not strategic. The quarterly cash flow ritual gives me a clear answer. So my hiring formula is something like this. Here's how I think about it. If my excess reserves can cover 12 months of new hires' fully loaded cost, I can afford to hire. Why 12 months? Because I really want a buffer. I don't want to hire someone and then panic 6 months later if my revenue dips. So the example I like to use is, let's just say I'm thinking about hiring a client service associate. Fully loaded cost, salary, benefits, taxes, software, new computer. Let's just call that $65,000 per year or $16,250 per quarter. So do I have 12 months of that in excess reserves? 12 months equals $65,000. My current excess reserves is $215,000 from our example. Yes, I can hire. And I still have $150,000 left in reserves for other growth investments, or just let them sit there and build. So this is what I call growth funded hiring. You're not hiring because you're drowning. You're hiring because you have the capital, the runway, and the clarity. And that changes everything, because now you can take your time finding the right person. That's hard for solopreneurs to go hire somebody, by the way. Onboard them properly. Give them time to ramp up without panicking about cash flow. That's strategic scaling. No tax surprises. I never scramble in April. My tax reserve account is fully funded every single quarter. When estimated payments are due, I just transfer from that account over. No stress, no surprises. Number 2, consistent wealth building. Melissa and I are systematically building wealth. Every single quarter, our 401ks are maxed, our cash balance plan is funded, and we got personal investments that are growing as well. It's automatic, it's intentional, it's simple. We also have clear growth decisions. When I'm considering a new hire, a new marketing campaign, a new software investment, I don't have to guess. I look at my excess reserves and I know immediately whether I can afford it or not. That clarity eliminates hesitation. Biggest thing it's going to give you, and it gives me, is peace of mind. I sleep well. I know exactly where the business stands financially. Every single quarter, I got no fog, no guessing, just clarity. If you want to implement this in your own business, here's what you need. You're going to need some tools. The first tool is going to be accounting software, whether it's QuickBooks, Xero, FreshBooks, just something that tracks your income and your expenses. Separate bank accounts. You're going to need them for operating, which you probably have a business bank account, a tax reserve, and then your wealth building, which is outside the business. And then a simple spreadsheet. Now, I actually use a notepad to just keep an idea on these cash flow pieces. I do put it into a spreadsheet after I'm done, but I start on just a simple notepad and I pencil it out every single quarter. The time it takes, 90 minutes, 4 times a year, the start of each quarter. So here's the process. Calculate your total cash available. You figure out your bank balance plus your quarterly revenue. Estimate your quarterly expenses. Run last quarter's P&L. Set aside your taxes. Set aside your wealth, your retirement, your personal investments, and calculate your excess reserves. What's left is your growth capital. By the end, you will know what you can pay yourself, what you need to set aside for taxes, what you have available to invest in growth, and whether you can afford to hire, all in 90 minutes every single quarter. So let's recap the quarterly cash flow ritual. Step 1, calculate your total cash available, your bank balance plus your revenue. Step number 2, estimate your quarterly expenses. Last quarter's P&L. Step 3, set aside for taxes. Remember, 30 to 35% of net profit to be safe, or figure out what your number is from your CPA. Step 4, set aside your wealth, your retirement, and your investments. Step 5, calculate your excess reserve, which is your growth capital. This is the 3 money buckets method in action, and it's how you move from operating in the fog to operating with clarity. If you want to know whether you need this ritual, ask yourself the following. Do I know right now how much I can afford to pay myself this quarter? Do I have enough set aside for my next tax payment? Do I know whether I can afford to hire someone in the next 6 months? If the answer to any of those is, I'm not sure, then you need this ritual. If you want to see how this fits into a complete financial system, taxes, wealth, cash flow, growth, I've put it all together in what's called the Scaling Wealth Blueprint. It's specifically designed for solopreneurs earning between $500,000 and $1 million, and it walks you through the exact systems I use. And the link is in the description below. I've been doing this for 30 years, and here's what I know. Clarity eliminates stress. When you know your numbers, really know them, you can make confident decisions. You can scale intentionally. You can hire strategically. You can sleep well. And this ritual takes 90 minutes, 4 times a year. And it's one of the highest ROI activities you can do on your business. Thanks for watching. I'll see you in the next one.